What's up, everybody? This is DeFi Enthusiast from the Crypto Ronins. I hope that you're all doing well. So today, at the time of this recording, the price of Bitcoin is at $66,848, and the Bitcoin dominance is at 56.1%, and the Ethereum dominance is at 10.4%. So we came up. So we finally have part of our newsletter. I'm going to read it out to you guys, and you guys can, subscribe to our newsletter to see everything. We did a whole deep dive on Tau, and we've got a new deep dive coming as well. And so in this issue, we cover how a tightening global energy map is beginning to reshape power, commodities, and capital flows, and why this emerging energy lockdown may become one of the most important macro forces behind the next phase of digital asset adoption, why Bitcoin is breaking under pressure as geopolitics reclaim control of the market narrative, what that means for risk assets in the near term, and how to separate emotional volatility from structural opportunity. Why Bitcoin may look quiet on the surface while smart money continues positioning underneath, with a closer look at what silence often signals during transitional phase in the market cycle. Why the claim that Bitcoin is a scam continues to collapse under real-world stress, and how the latest war-driven market reactions may have strengthened the assets rather than weakened it. Fresh deep dive into BitTensor and the Tau thesis, exploring why decentralized intelligence markets remain one of the most important asymmetric narrative in crypto today. A full-on chain overview of VanEck's portfolio activity, tracking positioning, wallet behavior, and what institutional capital movement may be revealing beneath the surface. And finally, a Bitcoin technical analysis breakdown examining the current structure, key pressure zones, and what price action may be signaling as macro uncertainty continues to drive market behavior. So guys, the illusion of temporary shock. The mainstream narrative frames the current energy crisis as another cyclical disruption. That framing is dangerously incomplete. What we are witnessing is not just volatility, it is systematic constraint. The closure and destabilization of the Strait of Hormuz alone has already removed a massive portion of global supply. Roughly 20% of global oil and LNG flows through this single corridor. The artery is now functionally compromised. Shipping has collapsed. Tanker traffic has dropped towards zero in periods of peak tension. This is not a market fluctuation. This is a structural bottleneck. From energy crisis to energy control. Historically, energy crises lead to price spikes. This time, the trajectory is different. The scale of disruption has already been compared to, and in some cases exceeding, the 1970s oil shocks, widely considered the most severe energy crisis in modern history. But there is one key difference. Back then, the solution was supply expansion. Today, supply cannot be easily replaced. Critical infrastructure has been directly targeted. Gas fields, LNG terminals, and transport routes are under attack. At the same time, nations are prioritizing domestic survival. China has already restricted fuel exports to protect internal demand, worsening global shortages. This is a shift from global energy markets to national energy preservation. The lockdown mechanism: when supply cannot meet demand, systems do not simply fail, they tighten control. We are already seeing early signals of what comes next. Strategic reserves being deployed, governments preparing emergency measures, central banks pausing policy shifts due to energy-driven inflation, discussions around rationing and demand suppression emerging again. This is a blueprint of an energy lockdown, not declared but enforced through necessity. Why rationing becomes inevitable. The math's simple. If a disruption lasts beyond a few months, it becomes systemic. Energy executives are already warning that 3 to 4 months of disruption could trigger a global economic breakdown. Now layer that with supply chain fragility, LNG dependency across Asia and Europe, industrial reliance on hydrocarbons for fertilizers, chemicals, and manufacturing. This is no longer just about fuel. It becomes food production, industrial output, electricity stability. At that point, governments have only one lever left: control demand, which translates to energy usage restrictions, rolling outages, industrial prioritization, consumer rationing. The silent transition to energy lockdown. The most important insight is this: energy lockdown will not arrive as a headline. Exactly. It will arrive as a sequence. First price spikes, then shortages, then temporary measures, then normalization of restrictions. We have seen this playbook before, just not in energy. We saw this back in the what I would call the era of COVID as well. The difference now is that energy is the base layer of everything. Without it, economies stall, supply chains break, social stability weakens. Even when central banks are already reacting to prolonged inflation, risks driven by energy constraints. This is how lockdown becomes embedded, not through policy announcements, but through economic inevitability. Structural takeaway: this is no longer a question of if, it is a question of how severe. The world is transitioning from abundant, globalized energy, constrained, controlled energy systems. And once that transition completes, the implications extend far beyond commodities. Geopolitics becomes energy first. Economies become energy dependent at a policy level. Capital flows shift towards energy secure systems. Our final thoughts on this matter are: the market is still pricing this as a disruption. It should be pricing it as a regime change, because once energy becomes scarce enough, it is no longer traded freely. It is allocated. And this is the definition of a lockdown. Because of that, Bitcoin, broke under pressure. This is all the paid stuff. You guys can literally subscribe to our channel. You can check out everything, our breakdown on Tau and all the good stuff as well. And this is why I say that, the next bull run is already here, but you are too busy to notice that. And I'll tell you why. After a long time, we saw manufacturing PMI at 52.7%. The ISM manufacturing report says that the manufacturing PMI registered 52.7% in March, a 0.3% point increase compared to the reading of 52.4% in February. The overall economy continued in expansion for the 17th month in a row. A manufacturing PMI above 47.5% over a period of time generally indicates an expansion of the overall economy. The new orders index expanded for the third straight month, after four straight readings in contraction, registering 53.5% down, 2.3 percentage points compared to February's figure of 55.8%. The March reading of the production index of 55.1% is 1.6 percentage points higher than the February's reading of 53.5%. The prices index remained in expansion or increasing territory, registered 78.3%, a 7.8% percentage point jump from February's reading of 70.5%. In the last 2 months, the index has increased 19.3% percentage points to reach its highest level since a reading of 78.5% in June 2022. The backlog of orders index registered 54.4%, down 2.2% points compared to the 56.6% recorded in February. The employment index registered 48.7%, down 0.1 percentage point from February's figure of 48.7%, says Spence. So guys, basically, historically, when the PMI reaches the levels of above 50, that means that there is a lot of liquidity coming. So this is the ISM PMI business cycle. Look at how it affects Bitcoin's price historically. Here, above 50, look what happened. It went up back in 2013. Then again, similarly around these levels. Then we went up in 2017. Then similarly, we did something like that. When above 50, we went up in 2021. And are we going to go up now in 2026? That's the main question. Now, usually history doesn't repeat, but it rhymes. And if you look at the historical pattern, it says that a bull run is imminent, right? It's right under our noses. It's already building pressure, and you need to be positioned properly in order for that. And you need the right information. You need the right alpha. You need the right analysis, right market, right understanding, the correct understanding of the markets, analysis, deep dives, all of that. And that's why our newsletter is the best one. And we recommend you that you subscribe to that. So when we see these type of things, we saw Bitcoin go above 100K in a market which had suppressed liquidity. ISM PMI being at these levels clearly indicates that more liquidity is about to come in. That also means that more dollar printing is probably going to be happening as well, And on another note, why I'm still very, very, very bullish is because while everybody's just distracted with the entire energy lockdown situation, the war, the tensions, every single tweet that either pumps the market or dumps the market by Trump, all of that, while that is happening, the big boys are playing. And look at this. Check this out. Schwab, right? Schwab plans spot Bitcoin Ether trading launch in first half of 2026. Charles Schwab, the 12th financial services giant with almost 12 trillion in client assets, is moving closer to direct crypto trading, offering subscription for early access to the Schwab crypto account. Charles Schwab plans to launch spot cryptocurrency trading for Bitcoin and Ethereum in the first half of 2026 through its Charles Schwab Premier Bank unit. The firm has opened a waitlist for its new Schwab crypto account, which will let clients buy and sell the two largest cryptocurrencies alongside their traditional investments. Schwab is leveraging its 11.9 trillion in client assets to compete with established crypto exchanges. So the giant Charles Schwab plans to roll out spot cryptocurrency trading in the first half. We remain on track to launch our spot crypto offer in the first half of 2026. Now, this is huge, guys. The firm has opened a waitlist for clients seeking early access to what it calls a Schwab crypto account, which will allow users to buy and sell the two largest cryptocurrencies. The firm will offer the services via Charles Schwab Premier Bank SSB. The move builds on comments from CEO Rick Wurster, who said last July that Schwab aimed to introduce crypto trading sometime soon. In response to client demand, he framed the effort as a way to bring digital assets into the same account view as stocks and bonds in a push towards a more unified investment platform. Schwab's scale could give it an edge as it enters a market long dominated by crypto-native exchanges. The firm reported 11.9 trillion in client assets in 2025, offering a built-in base of retail and institutional investors who may prefer trading crypto within a familiar brokerage environment rather than using standalone platforms. The firm already allows clients to invest in ETFs linked to cryptocurrencies and trade Bitcoin futures on its platform. It also launched the Schwab Crypto Thematic Index, SCCE, an ETF that tracks the performance of companies linked to the digital asset sector. Now, this is absolutely amazing, guys. This is huge. Crypto spot services being offered by one of the largest financial giants, with $12 trillion in client assets. These guys are coming into crypto. Now, why are they coming into crypto right now when everybody is supposedly saying, crypto is dead, it's only Bitcoin, and Ethereum is worthless or pointless, but there's, Ethereum services are being offered too, and, there's so much stuff linked to the Ethereum ecosystem. So why are these guys getting in when other people are, all your favorite influencers and doomers and doom posters are saying that, it's all over, it's never going to recover, nothing's going to be better again. And let me tell you something, when things do get better, those same doomers are going to come back and they're going to start showing you their profits and losses, and they're going to start showing you their 20x gains and, how they timed the bottom. It's always like that. So always remember, try to always listen to people and learn from people that give you a balanced overview, as opposed to people that are always trying to create panic and chaos and trying to just get their posts where they try to get a reaction from their posts by posting clickbaity things. And that's why Crypto Ronins is so legit. That's why we are, a legit newsletter. We are giving you the right information, the best information that is possibly out there, because we do our due diligence, we do our research, we do our deep dives. We also give the risk factors. We give everything. Like if you've been wondering, hey, I don't have a lot of time, to look into the markets, but I want to have an understanding of the markets, and I want a portfolio that is for the midterm to long term, then our newsletter is for you. Okay. So moving forward, guys, not only this is absolutely massive as well. Check this out. I want you guys to hear this for yourselves. Bitcoin is a 100% viable asset depending on when you start the clock, says VanEck's Matthew Siegel. Let's see what he says.
Welcome back to Power Lunch. Since the start of the war in Iran, all major averages are solidly in the red, falling nearly 4% apiece. But The one asset that's bucking the trend and is actually higher since the start of the war, believe it or not, is Bitcoin. In fact, the digital coin outperformed gold by nearly 13% in the month of March, which is the largest outperformance for Bitcoin since November of 2024. So can that flagship cryptocurrency be considered the real quote unquote safe haven asset? It's been one of the use cases that's been espoused on in the past. Joining me now to discuss this is Matthew Siegel, the head of digital asset research over at Van Eck Funds. So Matthew, let's talk about the price action that we've seen. It's outperformed, but it hasn't been without the roller coaster ride. A lot of folks said that price action at the beginning of the war signaled that it was no longer a viable asset. Is it or is it not?
It's 100% viable. It really depends when you start the clock. So Bitcoin peaked last October, 1 month before the NASDAQ peaked. And, if the bottom holds here, then it also bottomed 1 month before the NASDAQ, roughly. So, you tell me your macro outlook. Unfortunately, right now, for good or for bad, Bitcoin is trading at a high correlation with risk assets. And I think there's many reasons why that's the case. One is this 4-year cycle for Bitcoin, which has been very reliable, and the down year tends to be a midterm year. That's what we're seeing right now. Certainly tightening liquidity conditions because of the energy price spike. And some of the largest holders of Bitcoin have been sellers, partially because of the 4-year cycle, but also these miners who control, roughly 40% of the Bitcoin network, the publicly traded miners. They've been actively selling their coins in the spot market to pay for their AI build out. So we're optimistic that some of those conditions are going to turn around in the second half of the year. We wouldn't be pushing all in right now. But when the funding rates get negative like they are now, when it's much more expensive to buy puts than calls, as is the case now, from a tactical basis, we do like it here.
What about the kind of structural developments and evolutions that we've seen with regard to how people actually own or get exposure to cryptocurrencies, and Bitcoin in particular, because it's far and away the biggest one out there? There are now retail avenues, institutional avenues by which you can use exchange traded products. You don't have to have a digital wallet yourself. What exactly does that kind of demand profile look like? And how has it changed, say, since the beginning of the war to where we are now? Has it materially been affected by the kind of price volatility that we've seen?
I love what he says.
Adoption continues to grow, and the best leading indicator is the surveys. Whether you ask retail investors or institutional investors, do you plan to allocate more to this asset class in the future? The answer is yes. And we're seeing that at the sovereign level, where the first central bank has just bought Bitcoin for its foreign exchange reserves. We're seeing that obviously across Wall Street, whether it's Morgan Stanley filing for a Bitcoin ETF, and the retail investor, especially outside the US, continues to allocate. So at some point, the bill for this war will come due, and the fiscal and monetary largesse in G7 will become dominant again from a narrative perspective, and that'll mark the turn in Bitcoin. Just one thing on the integration between Wall Street and crypto, there's 10 crypto companies that have banking charters that are going to be approved. Now, these are special purpose banking charters, but they're going to make it much easier for folks to move value back and forth between fiat rails and crypto rails. Those paths continue. Coinbase is got a banking license today, in fact, and that is going to, we think, turbocharge adoption in the next cycle.
All right. So let's say hypothetically you are correct about this thesis. At what point can investors, or what are you telling clients about when we could see $100,000 Bitcoin again, if at all?
I think that's totally reasonable in 1 year's time.
There we go. So as you just heard it here, guys. So this guy, he's from Van Eck, okay? This is Matthew Siegel, right? And he is saying that within a year's time, we could probably, or even less, we could see Bitcoin back above 100K. And I definitely see that happening as well. So you have like approximately from now, what could happen, okay, potentially, if this war continues, here's what I see happening. Right now, we might see a little bit of a cool-off period, maybe, and we're going to start maybe seeing some upward price movement in Bitcoin for maybe another month. And this is just speculation. This is just, analysis that I could be wrong. And then what we're going to see is that after around the end, around July, we're going to start seeing some downturn. If the war continues further, it's going to create pressure, and it's obviously risk-on assets are going to be affected. And it might take Bitcoin's price down to sub 50K levels by the end of this year. After some consolidation, we're going to start seeing it go up for a long period of time because of all the adoption and everything that is taking place. If you remember in my previous video, I said they're trying to build the rails for CBDCs to be a cash-setting out option because they want to control so much of your money. And I think that is turning out to be true. That's why there's so many delays. This price action, everything is manipulated. Everything is being kept, it's being suppressed so much. And then when the pressure cooker, when the pressure cooker is going to explode, the price is just going to go crazy. And obviously that goes also for very, very solid, fundamentally strong projects as well, right? And moving forward, as you can see, the money printer is going to be turned on very soon. The US has to refinance over $8 trillion in debt next year. See, next year, again, more money printing is coming. As long as fiat has no bottom, Bitcoin has no top. Does that make sense? More money printing, more liquidity, ISM coming out positive, all of that indicates that a bull run is underway and you should be positioning yourselves strategically. And of course, if you want some advice, of course, we're not financial advisors. None of anything that we say is not financial advice, but we can give you some guidance as well. And of course, you should join our newsletter to stay ahead of the game in the markets. Very, very important, guys. Join us. And then, of course, not everything comes out with, positive. Of course, these market conditions have been really brutal for a lot of crypto companies, a lot of startup, because crypto is startup land. Like I've been saying, it's the new form of startup land. And some great ideas come and some just don't work out. So, for example, recently, Dmail, that's something that I personally invested in, guys. Dmail is shutting down. I bought a bunch of domains. I thought, decentralized email is going to be the next big thing, and it could have been, but they just couldn't maintain it, and they're shutting down their services. Stuff like this happens, guys. There are horror stories. That's why crypto is not for everybody, and that's why you should always put what you're willing to lose. You shouldn't go all in. Some people do go all in because they have so much conviction. But if you want to go all in, you should try and go all in into projects and coins that have a large market cap. Okay. For example, Chainlink and Solana, they lead the Solana ecosystem projects by development activity with Jupiter and Swarms rising in rankings per sentiment. Okay, this is really bullish, guys, because this shows that ecosystem development, the ecosystem expansion is showing a healthy sign of companies that are constantly developing and doing things. And Solana is definitely one of them. I think they are going to be one of the largest RWA chains. Because why? I'm not saying that they're particularly RWA, but so many real-world assets projects are going to come onto Chainlink. For example, Maple Finance, which did very well on our earliest calls. People made a lot of money through that when we gave it originally. Then Ondo as well. I think while Ondo is on Ethereum, I also, if I remember correctly, it became multi-chain. Maybe I'm wrong, but I definitely remember that Maple had become multi-chain, and it did very well by coming onto Solana. And then of course Chainlink is the rock star of oracles, right? And basically, Chainlink was also our very, very first crypto that we got into. So it's great to see how much they've been growing, and it's great to see that, how much they've been expanding. And basically, data is everything, guys. Getting the correct amount of data at the right time, in terms of money markets and all of that is very, very important. And Link plays such an important role in everything. Data is king, and Chainlink is the rock star of data as well. And we're so glad that, that this is something that has been around and it's going to be around for a long time. As long as crypto exists, Chainlink is there, in our opinion. So it's a great one to still, again, not financial advice, but it's a great one to get into, in my opinion, and hold for the long term. Okay. Again, not financial advice, but it is what it is. And I think it's so cool. And the user adoption rate, the Chainlink community has been growing and growing, and people have been buying it up, during these dips. So that's another indicator as well, of where things are heading for Chainlink. And of course Solana too. So yeah. And this is why, right? Why I believe that we're going to be seeing a massive bull run coming while all the doomers are posting whatever. The data shows a completely different story. What's developing? Schwab getting into crypto, right? Charles Schwab, right, getting into crypto. All of that stuff. Chainlink's ecosystem growing, right? The development activity has been increasing. The user base for Chainlink has been increasing. The holders, the investors have been increasing, and that shows that that's fundamentally strong. Altcoins are going to do very well as well. Those who are able to actually deliver something that is truly unique, and the teams actually are honest and transparent, they are the ones that are going to win. And of course, finding that is not easy. Our newsletter is also going to help you with that because of the deep dives that we give. We also give proper breakdowns of what a project does, what is its use case, what partnerships do they have, all of that stuff, and plus what they're working on, what are the risk factors, and how safe it is. All of that, plus so much more, as you already know. Join our newsletter, guys. I think it's going to be one of the best investments that you make, and it only costs you less than a price of one lunch in the month. So I think you're not going to get a better deal than that, to be honest with you. And we look forward to seeing you inside in our Crypto Ronins newsletter. We look forward to seeing you inside. So this is me, the DeFi enthusiast from the Crypto Ronins, signing off for now. Hope you have a wonderful day or night wherever you are. And have a great time. Stay vigilant, stay awesome. Join our newsletter for the best information out there, and we look forward to seeing you inside. And also stay calm during these times. Very, very important. Join us. Bye.